Good evening to one and all present here. I am Shakti Devi. Today we are discuss about the topic is funds flow statement. First of all, what do you mean by fund? Fund means cash. Next, flow. Flow means changes of cash. That means inflow or outflow. Inflow means income of the firm. Outflow means the expenses of the firm. Meaning of fund flow statement. The fund flow statement is a report on the movement of fund. It explains how fund is raised and used during an accounting period. That's the meaning of fund flow statement. Next, objectives of fund flow statement. To show how key resources have been obtained and used. To indicate the result of current financial management. Next, to have an assessment of the working capital position of the concern. Next, importance of fund flow statement. First one is analysis of fund flows, analysis of financial statement. Balance sheet gives all the still pictures of financial position as on the last date of accounting during the period. Next, second, rational dividend policy. For the construction a projected fund flow statement for the forthcoming year, it is possible to have an idea about the future position, plan for optimum allocation of fund. Third, guide to future course of action. The fund requirement of the firm can be made known in advance from the projected fund flow statement. Fourth, judicious allocation of resources. The projected fund flow statements enable the firm to make plan for optimum allocation of fund. Next, discuss the topic limitation of fund flow statement. First one is not sufficiently explanatory. The fund flow statement is not sufficient explanatory. Second, not full proof. The income statement and balance sheet are susceptible to manipulation and influence, not personal judgment exercised by management. Third one, not relevant. The fund flow statement is not much relevant for decision making as the cash flow analysis. Fourth one, structural changes not disclosed. The fund flow statement does not indicate the structural changes in financial relationship in a firm. Fifth one, lack of originality. The fund flow statement is prepared by rearranging the figures already provided in the balance sheet and income statement. Next, preparation of fund flow statement. Fund flow statement is usually prepared for 1 year on the basis of balance sheet and additional information. Preparation of fund flow statement. There are 3 steps. First one is schedule of changes in working capital. Second one, adjusted profit and loss account. Third one, fund flow statement. These 3 steps are preparation of fund flow statement. First one is schedule of changes in working capital. Schedule of changes in working capital is prepared to find the working capital increase or decrease during the year. Working capital refers to the capital required for on day-to-day operation of a business. Working capital is current asset minus current liability. So the current asset and current liability is short-term solvency. That is a liquidity asset. That means easily converted into cash within a period of both assets and liabilities within a period of 12 months. So it is a short-term duration. It is a short-term solvency of ratio, that is current asset and current liability. What are the items or current asset? First one is cash, bank, stock, prepaid expenses, debtors, bills receivable, account receivable. Account receivables include debtors plus bills receivable, sundry debtors, bad debts, sundry advances and short-term investment. These items are current asset. Next, current liabilities. Current liabilities includes bank loan, bank overdraft, outstanding expenses, provision for doubtful debts, liability for expenses and account payable. Account payable includes sundry creditors plus bills payable. Next, the formula for schedule of changes in working capital. Increase the schedule of changes in working capital should be consider the following rules. First, increasing current asset, increasing working capital. Decreasing current asset, decreasing working capital. For example, in the balance, given their balance sheet, during the period 2020, the stock value is 20,000. Next year 2021, the stock value is 10,000. So both year comparatively, in current year the value of stock is reduced. So decreasing current asset, the simultaneously the working capital is decreased. Next, comparative the liabilities, increasing current liability, decreasing working capital. Decreasing current liability, increasing working capital. So these are the formula for schedule of changes in working capital. Next, adjusted profit and loss account. The adjusted profit and loss account is prepared to ascertain fund from operation. To ascertain the fund generated by operations, the adjusted profit and loss account is prepared by taking into account only non-operating income, gain and non-operating expenses and losses. So, what are the items are non-operating income and gain, non-operating expenses and losses? Both non-operating income and expenses which do not involve any changes in working capital. So, the items of non-operating income and gain listed as first one is interest on investment and interest on debentures, dividend received, profit on sale of fixed asset, refund of tax. Next, non-operating expenses and losses, depreciation on fixed asset, provision for tax, proposed dividend, loss on sale of machinery, interim dividend, goodwill written off, preliminary expenses, discount on issue of debentures, transfer of general reserves. These items are included in the non-operating expenses and losses. Next, fund flow statement. The third step is fund flow statement. The fund flow statement is also known as the statement of sources and application of fund. It details how a company manage its fund. It can be broken into the two components. One is sources of fund, another one is application of fund. What are the items are include sources of fund? First one is issue of shares and debenture, raising of long-term loan, income from investment, sale of fixed asset. Next, application of fund items are repayment of loan, purchase of fixed asset, payment of taxes and dividends, drawings and redemption of debentures. These are the methods of preparation of fund flow statement. Thank you.